So this has actually taken about 2 years to develop this up move and about 3 years to develop the flag pattern through here. If this is a real flag pattern, we could be seeing a really big move to come. So before I do get into that, guys, let me just quickly go share with you what's happening with the actual markets today, the overall stock market, and we can have a bit of an update from there. So from a short-term perspective, guys, the Dow Jones is still pretty much stuck in this overall sideways range from here, as you can see. But the trajectory to the stock market is definitely a lot more upside to come when it comes to the markets from here. This is what we're seeing from here when it comes down to the markets, and this is the Dow Jones. We also can see here that by looking at the S&P 500 as well too, we've had a very big move, big bottom through here. And one thing I really want you to encourage you to do is think about, if you missed this opportunity buying down here and you're so surprised about this big up move, I really want you to think about what happened there, because this happens every single year. Every single year we get a drop and we get a freak out without fail. Now, at least most of the time we get a good 15, and then this time was actually a 20% drop, and then we get a rally. Most of the time we do get that drop. It is not a start of a bear market. It is a continuation of a bear market. And in fact, if I show you some of my longer term charts, here's my longer term charts. And this is just what I'm trying to share with you here to show you why next time. So if you did miss this opportunity here, me and my clients have actually taken advantage of this. And if traders, if you like to learn the exact trading pattern I use, and I've been using now for well over 10 years of my own personal trading career, then there's the first thing in the description there, guys. Go join my webinar that I'm running today, and I'll teach you all the details to my trading, basically my trading setup and how I trade, and why I actually like to prefer using options over trading, and how you incorporate that, and a whole bunch of other stuff as well too. But looking at the S&P 500, as you can see here, right, this is the S&P 500 monthly charts. What do you notice about here? Firstly, you notice that the moving average here, which is a 52 moving average. Is that a 52-day moving average, John? No, I'm looking at a monthly chart and I'm using a 52 moving average. Oh, so it's a 52-month moving average. Well, I'm looking at a monthly chart and I have the moving average on a monthly chart. So therefore, whatever this moving average is, it's a 52 monthly moving average. Got it? Right? But what do we notice through here? Right? And this is where, like, the reason I'm telling you this here, guys, is because I think the biggest mistake that I made for so long, and I've been trading markets now for 20 years, and one of the biggest mistakes that I made for so long was focusing so much on, oh my goodness, the tariff and the market's dropping and we're down 20%, and there's a freak out action that happens there. But when you bring up the chart like this here, and this is where, like, I actually have, I see a 7,500 target coming here. If you see what's happening here, what is the number one thing you can notice about this big long-term monthly charts? Two things you'll notice, right? Two things you notice. Firstly, you notice how the moving average is still trending up, still trending up. It's not until we start to get the flattening out period that we start with this overall massive bull market is end. Yes, we do get our 20% drops. This here is the 1987 stock market crash from here. But notice what happened. In the moment of the 2, 3, 4, 5, 6 months of the drop, look at this here. The long-term wave was coming back in. So even though we get these short-term drops, and I say short-term drops, but think about short-term as in like the scale of what we're looking at here. And what I mean by that is this. If we go look at this here, this whole drop from here to here, that there was 1 year. But that 1 year drop, you'll be thinking, no, this is not the start of a very big 80% correction. We're not there yet, right? And look at this here. And every single time we've had these scaring motions, right? These lows, higher lows, higher lows. See how the market just continue making these higher lows in these big monthly charts. So while we have the Trump in, while we have the COVID crash, while we have the recession talks, while we have you see, it's just another one of those. It just insert something else, scare market, new highs. Insert something else, scare market, new highs. Insert something else, scare market, new highs. Insert something else, tariff talk, new highs we come. And so as you can see, we're in a very big sort of strong bull market from here. And so we are on the path of destination to the upside. Now, we're looking at a monthly chart here. I must make this very clear to you guys. We are looking at a monthly chart. That means we can go down for a few weeks and this still be a valid chart. But John, you said the market's going to go up and it didn't. It went down today, 0.01%. And yes, you're right, it did. And that means you were wrong, John. Well, I'm not trying to be wrong or right in this market. I'm just presenting what I'm showing you right here. When I trade the market, now we're talking. All right, see, when I trade the market, I use an actual proven trading pattern set up when I enter the markets. Not just, well, John said the market's going to go up, so let me go long. If you do that, you know that you are on the right side of being part of the 90% who blow up 90% of their trading account in 90 days, 90, 90, 90, right? I don't want that for you. I want you to be around for quite some time, right? So one of the big things here is that, firstly, for you long-term investors, for you guys that have quite sizable investment accounts, then utilize this here, right? Because every single time people are freaked out, right? This, as you can see here, there's nothing to freak out about. In fact, let's look at the Dow Jones. Look at this here. The Dow Jones is doing what? Does this look like anything does this look like there's a big top formation forming? No. Lows, higher lows all the way up. The moving average is still trending up. Once the moving average does start to go like this through here, right? So as you can see here, once the moving average starts to do that, you'll know what? You'll know we're getting very close towards the end, right? We're getting very, very close. But what are we still doing through here? Now remember, we can have these sideways periods all through here. Sideways, drop, sideways. And what does that mean? We can have these 3 months, 6 months, 1 year, aka what happened all through here, and we still be in a very big strong bull market overall. See that through there? So right now, no, this is not the end of the bull market. No, it's not the end of the bull market. Yeah. Right, this is just a continuation of the upside. Very big. So we are getting ready for a face ripper rally. Now, yes, I do see through most, as you can see here, right? Through most years, we typically do get at least that scary time. I call it scary time, right? The market's down 20%. And then there's obviously the recession fears and talking, all that sort of stuff, right? That starts to come into play. I do see we're likely to go through another good correction next year, but every single year we go through those sort of motions. So one, be prepared for it, but two, when it does start to happen again next year, and I say next year because at least once a year we get the freak out, and then we typically do pretty well from majority of the year. Right now, guys, big, massive long-term trend. We may spend a few months to the downside, but those who see this here are likely to jump on the big trend instead of trying to pick the tops. And as you can see, if for the last 10 years, for you guys that are trying to time the top, you've been getting run over. The number one thing I say is if the market's trending up, making higher lows, and just keep it really simple. If the moving average is trending up, go with that moving average. The end. But John, you don't understand. The top's in, and you try to capture profit here. You try to capture this profit. See that there? What do you? No. Stop. Don't. No. What about this move here? What about this move here? See these big moves here? Where have all the profits been? Going with that moving average. So, plonk on a 52 moving average on the chart. John, is that a daily chart? Yes. Yes. Yeah. Weekly chart? Yes. 4,500 year chart? Yes. Every chart. And if you see on that chart, we see a very strong moving average like this, and it's still going up like that. We are not flattening out. We're not going, we're not doing this here. We're not doing this here until we start to do that. Yes. Go with the market. Now, this is for overall buy and hold. For you guys that like to buy and hold and, that sort of stuff, right? Until we start to get this here on the monthly charts, which, by the way, it's going to take a few years to develop, right? just go with the market, right? Go with the market. And again, this when I'm looking for trading setups, this is my number one thing I use on my trading setup. And if I have a strong moving average like this and the moving average is going like that, well, guess what? All the big profits are made going with the moving average. So plonk on one moving average. That's it. All these other stochastics and rubbish you have on your charts, remove it all. It's not doing any good. It's confusing you. And that's the reason why, guys, on the webinar, first thing in the description, you'll see why just that 152 moving average can actually really help you there. See that through there? So that's what's happening with the overall stock market there, guys, on a big picture there. But if we go back to the small picture, this is the actual daily charts here on the Dow Jones, as you can see. So this is the Dow Jones, this is the S&P 500. One thing I'm noticing, guys, is this very strong move to the upside. Very strong move to the upside. And therefore, I do see that, yes, that big picture's in play, right? But I do see on this daily charts here, we're likely to rally. We may have a bit of a pause through here. And then when we break this level, that's when we're going to start to see the 7,500 level start to come into play from there. So one of the big things I really want to also share with you here, guys, is what I see coming in the gold market from here, right? By the way, this gold chart, weekly chart. I have a green moving average. This is a 24 moving average on the weekly charts. What did I say there a minute ago about the 52, right? If the moving average is trending strong, just go with it. Don't try and... You guys are trying to short... so I've seen some of you guys trying to short gold. Remember, guys, you want to make big profits, right? You want to make a big profit. You want to make a big profit in the market, right? You do, yeah. Well, big profits don't come from going against the market. If the market's there stepping up, right? It's like I'm going to try to go short here and short here and short here and short here because there's a head and shoulder here and there's a double top here and there's a divergence here. No, don't trade like that. I guarantee at least half of you guys are trading like that, right? But there's the divergence, John. There's a big, massive divergence on the MACD on the monthly chart. It's going to go down tomorrow. Come on. No, be sensible. Oh, there's a big, massive divergence on the monthly chart. It's going to go down tomorrow. No, that's a monthly chart. And the monthly bar hasn't closed yet, right? So just go with the market. But by looking at this level here, guys, I do see that possibly next year we're going to go through a bit of a recession period. And then we start to see something like this here, right? And then I see something really big coming when it comes to the overall gold market from here. So, and look at that level through there. And if I show you this level from here to here, let me bring up this chart here. Let me bring on this is the XLE market. This is the market that I was sharing with you guys at the start of this video. This is actually huge, right? I've been waiting to see what this XLE market, the energy sector market, does. See how I've got this major support resistance level through here? Through here. Look at all that resistance, and now what? Now it becomes support, right? See how it's all got that major resistance, now becoming support? You see that through there? So what that simply means is I was waiting to see, do we actually break this level on the downside? But now look what's happening. Now we're not. We're actually holding, we're bouncing. As long as it stays above this 75 level, right? We are developing one big massive flag formation. It's taken 3 years to develop, 3 years to make this, a 3-year bull flag that's making right now. And if we do start to break to the upside, we're probably likely to see a really big move to come. And the extension, this is going to be the flag pole. That's going to be the big flag. This is the monthly chart. So because it's taken 3 years to develop, once we break out, we could start to see a good 6 to 12 months on a minimum of a really big strong bull market. And a big strong bull market is stair stepping, right? That's a big bull market from there, just so you guys know. Bull market is not just straight up. Higher lows is what's a bull market, right? That's what a higher low. That's big bull market. Make sense? So they're the things I really wanted to cover with you there today, guys. I'm always looking for my next opportunity. I just got out of platinum for an amazing trade. I'm still in a trade right now that's at close to it's around 200% return on options. I'm trading this with options. I'm still in it right now. So both my platinum and this trade I'm in right now are doing really well. I'm out of platinum, so I've confirmed that. I'm still in this trade right now, and I'm always on the hunt for that next opportunity. Remember, the number one thing you want to start to do, guys, is you always want to be looking for opportunities to hold for many weeks and many months. If you are day trading, right, you're short-term trading, stop it. It's not worth it. It's not worth it. I guarantee you, any of you guys that are trading every day, you're not making money. Stop it, right? I guarantee you, look for one really good opportunity, look for 2 good opportunities, and one of those makes a good move for a month. That's how you make big money, right? That's how you make good money out of the market. So traders, once again, if you do need some help with your trading and you are struggling, right? Firstly, just own up to it. You suck as a trader. That's okay. I used to suck at trades as well too. Secondly, if that's the case, then go check my webinar today. I'm running it. First link in the description there, guys. It's going to help you out, and I'll speak to you real soon.